Welcome to this presentation on how financial modeling has evolved over the last 2-3 decades due to emergence of new tools like data visualization software, analytics, generative AI, etc. I am Aninda Datta, the presenter. Jai Guruji, Shukrana Guruji. Here we'll be covering the following areas: the traditional pre-digital era of financial reporting, ERP and business intelligence era of financial reporting, the transformation from static reports to real-time reports, interactive reports, emergence of various analytical tools, AI-driven tools aiding in generative AI, generative interactive reports and insights, cloud computing and data analytics era reporting, generative AI and natural language-based copilot era, and the conclusions. The traditional pre-digital era of MIS preparation and financial modeling, that was spreadsheet-centric finance. Main spreadsheets used were Lotus 123 and Excel. The models were prepared manually on spreadsheets using cell-by-cell logic, had limited automation. However, the Excel formula were very helpful in work execution. The nature of work was backward-looking. That is focused on historical financial statements like balance sheet, profit and loss account, cash flow statement, etc. DCF's budgets were manually prepared and was time consuming. Plus the users needed to possess good knowledge of Excel formula and their working. However, scenario planning was very difficult and time consuming. Analysts spent most of the time manually entering and updating data. There were scalability challenges whenever data grew large. MIS reports were prepared manually. Reports were static and not interactive in form of Excel or PDF. Data for the reports was taken from the accounting systems like Tally, ERP, etc., mainly through the download route. Collaboration meant moving static reports back and forth via emails, risking errors and inconsistencies. The repetitive tasks in Excel could be automated by using Visual Basic programming, but the user needed good knowledge of the VBA coding. However, any change in the underlying data required running the VBA codes again. Even maintaining audit trail of changes was difficult. The ERP and business intelligence era. Data integration becomes key to efficient reporting, and data visualization tools like Tableau, Looker, Power BI were used with the ERPs. Now, what are the practices prevalent in the pre-digital era? Limited visualization tools were available in Excel, and most visuals were prepared in PowerPoint and were static visuals. MIS preparation was still Excel driven, but Excel files could be uploaded into data visualization tools like Power BI to make wide range of graphical reports. Now, Excel itself provided pivot table features using the OLAP database concept, enabling compiling large reports into MIS reports, but initially the pivot tables were static and did not refresh with change in the underlying data. Now, in the business intelligence era, pivot tables in Excel could be refreshed, and MIS in Power BI / Tableau also could be refreshed through scheduling or through direct query / live connection mode. The MIS reports in Excel had to be prepared with new data from ERP accounting softwares after periodic intervals. In the business intelligence era, MIS evolved from static to interactive. Excel example, in Power BI, there are 3 different modes for connecting with the source data. Direct query mode, data is not stored in Power BI, but it queries the source database live each time an user interacts with the reports. So refresh is on demand, and reports are near real time depending on the database latency. Now, there is a complete absence of other features with Excel like easy scenario planning, what if provided limited facility, simulation, decision variable optimization, etc. In the business intelligence era, many Excel add-in software started appearing which enabled easy scenario planning, Monte Carlo simulation, variable optimization, etc. Now, financial reporting process started moving from static reports to interactive reports, and analytics with drill-down filters started appearing. MIS became continuous and real-time and not monthly or quarterly. Thus, reporting flexibility with real-time updates provided better insights about the past performance of the company, and a wide range of visuals were available. However, using many data visualization softwares generally required knowledge of some coding. Example, using Power BI required knowledge of functional code called DAX for preparation of non-standardized and specialized reports. The static reports were replaced by dynamic reports with the real-time updates augmented by easy-to-use visuals. However, there was not much scope for using statistical methods in enterprise finance, like using time series to forecast sales, accounts receivables, etc. The data visualization softwares could be connected directly with ERP data, thus eliminating the needs for separate spreadsheet reports. However, the scope to bring data in the data visualization softwares from other applications through AIP was possible only in the limited cases. All sorts of filters and slices are available in visualization softwares, thus enabling all sorts of combinations, groupings, and classifications in reports. However, natural language queries were not available, and no AI support was available on the platform to guide the execution of the queries. The emergence of cloud computing and data analytics. The cloud computing foundation of change. The centralized data repository. All financial data consolidated in a single accessible locations with the real-time synchronization across departments and subsidiaries. Scalable infrastructure. Computing power expands seamlessly during peak reporting periods without costly hardware investments and capacity constraints. Enhanced collaboration. Teams across global locations work simultaneously on shared platforms, eliminating version conflicts and communication delays. Emergence of standardized ERPs and reporting softwares which could be used on plug-and-play basis by paying monthly subscription fees. Analytics, transformation raw data into strategic insights. Augmented data integration. Advanced algorithms extract and normalize data from multiple sources automatically, reducing manual entry by significantly. Intelligent pattern recognition. Machine learning identifies anomalies, trends, and correlations that human analysts might overlook in the vast datasets. Predictive modeling. Sophisticated forecasting tools project future performance based on historical patterns and market indicators. Real-time reporting. Instant access to current financial positions enables agile decision-making and rapid response to market changes. Now, emergence of new tools like SAP Analytics to Clouds, Salesforce Cloud, which integrated historical and real-time data for predictive analysis based on statistical methods like time series, regression, etc. The following are the various tools, analytic tools appeared in the market: SAP Analytics, Frontline Optimization, Oracle Crystal Ball, Salesforce Cloud, Price Optimization softwares. Now, what are the various new developments that happened? One is integration of Python/R in Power BI and other other data visualization for statistical forecasting. Predictive insights started appearing like next quarter sales and outstanding ARs using statistical methods like time series, regression, etc. Faster month close, higher accuracy of reports, lower operating expense from reduced manual operation, continuous access for finance team to critical data. Also, the need for large MIS teams preparing historical MIS started reducing, and the need for data analysis started increasing. The companies had option of moving enterprise data to cloud from own premises, as all ERP and business analytic platforms came up with a cloud version, which provided plug-and-play version of these softwares. CFO dashboards connected directly to ERP or CARM and other operational database. Also, companies could do new kind of analysis like simulation, decision variable optimization, etc. A new paradigm, the convergence of cloud computing and advanced analytics has fundamentally redefined financial reporting from a backward-looking compliance exercise to forward-looking strategic capability that supports enhanced decision-making. The analytics advantage, the deeper financial intelligence. Variance analysis, instantly compare actual results against budgets and forecasts, drilling down to identify root causes of deviations. Cash flow optimization, predictive analytics forecast cash positions, enabling better working capital management and investment timing. Insights, multidimensional analysis reveals profitability by customers, product, region, and other dimensions previously too complex to analyze. The data visualization tools allowing data access from other applications through APIs like Power BI to access and integrate data from other applications through R and Python scripts. Implementation considerations and challenges, strategic planning, define clear objectives, identify stakeholder needs, and establish success matrix before initiating the transformation journey. Change management, invest in comprehensive training programs and communication strategies to ensure user adoption and minimize resistance. Data governance, establish robust policies for data quality, security, privacy, and access controls to maintain integrity and compliance. Continuous improvement, regularly assess performance, gather user feedback, and refine process to maximize the value of your cloud analytics investment. A generative AI and natural language processor based on Copilot era. Emergence of Microsoft Copilot, Power BI Copilot, generative AI platforms like ChatGPT, Perplexity, etc. Now, lowering of knowledge-based entry barrier needed to use data visualization softwares and analytics platforms. All these new tools to work on natural language prompts and create new content. Like Copilot in Power BI could generate DAX code so the user could generate new reports without having expert knowledge of DAX codes. Could generate new reports based on natural language commands. The integration with ERPs allows copilots to work with auditable data sources, thereby improving reporting accuracy and compliance. Copilot in Excel could suggest the correct Excel formula based on the natural language prompts. Thus, the users need not be expert in Excel formula to be able to generate sophisticated Excel-based reports. An entire workflow could, like publishing reports at specific intervals on data refreshment, could be achieved with help of Power Automate, integrate with through Power BI connectors. Copilot drastically reduces manual effort by automating time-consuming tasks like reconciliation, cleaning and formatting data, consolidation, variance analysis, etc. However, copilots on their own cannot do an entire process like generating financial statements based on trial balance uploaded on Excel. The users need to map every line item of trial balance to profit and loss and balance sheet. Based on that, Copilot could do a category-based compilation. In Power BI, Copilot can generate complex dashboards, visualizations, reports simply from a natural language prompts. There are some AI-based platforms which could do a first point preparation of financial statements or DCF valuation statements, but the process so far is far from accurate and requires thorough proofreading. Now, this is the one-page compilation of the evolving process of the financial reporting and MIS preparation, how it has evolved over a period of time. The breadth and depth of financial reports have significantly increased over the last few decades. Now, what will be the future of financial reporting with machine learning, natural language processing, predictive analytics, and workflow automation as key drivers? AI-powered systems will provide more real-time intelligence, providing finance teams last-minute insights, enabling real-time scenario analysis for changes impacting business environment. AI systems will automate data integration from various data sources. ML algorithms detect anomalies and ensure accuracy in the real time. Analytics engines identify trends and insights. NLP-based AI agents provide narratives and automate the workflow. At present, AI systems on their own cannot accurately provide actionable decisions. In future, advanced AI-powered algorithms could automate workflows by analyzing historical patterns, market conditions, and external factors, and generate sophisticated forecasts. These predictive models help CFOs anticipate cash flow challenges, identify revenue opportunities, and optimize resource allocation months in advance. Enhance real-time decision-making capability. Scenario planning. Test multiple financial scenarios instantly to understand potential impacts before making critical decisions. Risk assessment. Identify and quantify financial risks across organizations with AI-powered risk models. Strategy guidance. Receive data-driven recommendations for resource allocation and investment priorities. In addition to the role of financial controllership, the finance department will play a role of more active strategic advisory to CEO, leveraging the AI tools and real-time data insights to improve the quality of decision making. The big challenge is to decide to what extent automation is to be adopted in financial reporting so that the risks of undetected errors are minimum. So this ends this presentation. Thanks for watching. Jai Guruji, Shukrana Guruji.